Travelling can be stressful, and for Aussies going overseas, they're finding their money isn't going as far. Philip and Martina Cross have been watching the Aussie dollar for 4 to 5 weeks.
I think you just have to step around it in some ways.
The couple are heading to Europe and won't be splashing out at fancy restaurants.
The tour is all inclusive, so I think that makes it a lot easier. So meals, accommodation, transfers, flights. So there's really only just the spending if you want to do that as we get there.
The Australian dollar has been falling against a basket of currencies in recent months, including the euro and the US dollar.
It's become really clear that the Aussie dollar is sensitive to Trump's tariff policy, so that if he goes aggressively on tariffs, then the Aussie will weaken. It's seen as one of the currencies likely to most underperform.
Movements in commodities prices also shift the Aussie's value. The price of iron ore has fallen from a 2021 all-time high of nearly $220 US a tonne to just over $100. And global sentiment's another force pushing the dollar around.
It's had a pretty tough few months, the Aussie, and I think the risks are that we see it struggling near term.
How low could we go?
I think we can get into the high 50s area, so whether it's a 58, 59 cents, that's probably low enough, that's probably gloomy enough, but quite frankly it's not that far away.
Deutsche Bank's analyst Lachlan Dinan says the direction of China's economy is also making markets nervous.
Our central outlook is for it to ease to around 60 US cents. There could be some downside risk to that, particularly if Trump's trade policies are quite a bit stronger than what people are expecting.
What the US Federal Reserve does with interest rates, analysts say, is the big wild card for the Australian dollar. Higher US interest rates relative to Australia puts downwards pressure on the local currency as traders buy up US dollars to invest in American assets. If, for example, there are fewer interest rate cuts in the United States, the local currency, the Aussie dollar, could fall further. A weaker dollar pushes up the price of imports, making the inflation fight more difficult. This business buys swimwear from a number of different countries.
All of our costs are in USD, from our manufacturing costs to our marketing costs, our systems, Google AdWords, you name it, everything's charged in USD, so that does make it difficult for us.
Its owner tries to future-proof the business by buying the Aussie dollar when it's strong against the greenback.
I'm definitely always watching it. If you're buying the dollar at the higher price, then you're able to kind of buy your orders at that price and keep your margins.
Some of this swimwear is also sold to US customers who are finding it cheaper compared to American alternatives. Those orders are boosting the company's bottom line and helping it to keep Australian prices lower.
Reaching out to export markets just makes it easier for us to not need to pass on that to our domestic customers.
For customers already in a cost of living crisis.